Welcome back to the Wealth Builder Movement. I am so excited for this session. We're going to be talking about stock market basics with Orlando Allen from Allen Financial Group. We're going to get into some things like, what the heck am I doing in the stock market? Is there money to be made here or just money to be lost? And then, should I be looking at my 401k or really just kind of set it and forget it? Orlando's going to give us the basics. We're not going to be able to touch on everything because our time is so limited, but I want to get started right away. So Orlando Allen, thank you for joining us today. Full disclosure, Orlando is my financial advisor. I cannot, make recommendations as a part of this hosting, but I will tell you that he is a fabulous financial advisor. But even more special than that, Orlando has put up with me and my ignorance of stock market investing. That has led to some good conversations where he had to break down, this is how this works. So Orlando, can you tell us your journey to building Allen Financial Group?
Yes. First of all, thanks for having me. It's a pleasure to be here. Allen Financial Group, I think it's not something that I necessarily created. I think it was something that was already there, and it just was awakened, within me. As a kid, I was always curious about investing. I didn't know that's what it was called, but I always had a knack for trying to figure out how things work. And later on in life, partnered with that, how things work is I always had a desire to help other people. And so these two worlds of understanding the world of finance and a desire to help people is kind of how AFG all came together.
Oh, nice. So there are not a lot of independent Black-owned financial firms.
Yeah.
What was your deciding factor and this is just for those, because building a financial firm is part of the wealth journey for some people that, and the concept is, do I do this under a set, do I go work for Raymond James or do I go on my own? So what inspired you to take the entrepreneurial route and go out on your own?
Oh, I always knew I wanted to be an entrepreneur, but I knew, coming just a few years out of college that I didn't know anybody. I had no name recognition. And so it was important to establish with a big brand. So coming right out of school, I established with a large firm, but they had a franchise option. And that franchise option allowed you to, basically work for them a few years and establish your own franchise. So we did that. But then shortly after that, I was concerned about the brand itself, even as a franchise. And when you're sitting across from someone, the folks that you work with become your friends. And I never wanted to feel like I had pressure from another firm to push any types of products or thought processes. I wanted to be free and independent. And when I sit down with people, share my ideas. And so that's one of the reasons we took it independent.
Wow, I love that. And so that's just something I wanted to hit on a little bit, because as we talk about wealth building, financial advisors, asset managers is part of the story, and just understanding the difference between somebody that works under a firm, somebody that works independently, and choosing, what works for you, what works best for you. So now I'm going to get into stock market. How do we so on just the basic level, I assume probably most of us know what the stock market is.
Yes.
And many people may already have a 401k and be invested, through that.
Yep.
Whether they know it or they don't know it. I know when we had that huge economic downturn, a lot of people were surprised to find out my retirement plan was tied up in what? What was it again? And so I want to start with this. What are the maybe top 3 common ways that people can be invested into the stock market?
Probably the most common way that people are investing, they don't even know it, is probably through some type of mutual fund. Which is just a pooling together of different stocks, whether those are equities or bond offerings. That's probably the most common way. Now, through different outlets and media and things like Reddit and all this stuff, people are getting more invested in stocks, which I think is great. It's an opportunity to learn about different things. So that's very common. But I would think pretty much stocks, mutual funds. A lot of people have gone onto the EFT bandwagon, exchange traded funds, which I think is an excellent way to make investments. But those are probably the top 3. Obviously, there's some other stuff out there, commodities and things like that. But those are where most people spend their time.
Wow. Okay. So mutual funds. When I'm invested in a mutual fund, it's a collection of stocks?
Yeah.
Or is the game different from mutual funds to me just deciding I want to go and, I don't know, invest in Google?
Absolutely, it is. The great thing about investing in a company like Google or Zoom last year was that thing might zoom up, to the top. The bad thing about that is if you watched other companies that started really well, like Beyond Meat, and then they dropped to the floor a little bit, right? We talked about this.
So, cut to wide frame. We have I'm just playing. So this is something I want. This is a good example, actually, and I wanted to bring this up. So Orlando just mentioned Zoom, which is something that he advised I get into that I said I didn't want to get into. And then I was really wild about Beyond Meat. So I got into Beyond Meat. Beyond Meat did excellently, and then it didn't. And then Orlando had to school me on, you got to know when to get out of the game. So for our viewers, that's a good lesson to learn, when to get in and when to get out. So talk to me about, people are into day trading. Is that in, out, in, out, in and out? And then what's the compromise between that and knowing when to get in and when to get out?
I'm glad you brought this up, and you're being very authentic because these are situations that real people have, and we want to make sure that we're educating them about real life situations. Often I get calls about, hey, I heard this tip in the elevator. I want to buy this stock. Our philosophy is, okay, that's great. We'll start with that. But what we really want to know is, what are you trying to achieve by buying this stock? There's a reason that you called me and you said you want to do this. So we want to figure that out. And what I would say is there is room for individual stock investing, and there's room for pooling assets in mutual funds or ETFs. My philosophy over the last 22 years has been to kind of put most of the assets in things that are more diversified. If that's an ETF, if that's a mutual fund, something as simple as the S&P 500. And then we go and purchase what I call these flyers, these independent companies like a Zoom or Google or Netflix or any company you can think of, to create more alpha within the portfolio. So it gives you a little tick up. But those aren't necessarily the drivers of the portfolio. So there's times to be in things that are exciting, and there's times not to be. I think the use of sell stops is a good way to invest. More than anything, you've got to be disciplined.
Yeah. Oh, wow. So when we're thinking about getting into the stock market, we talked about mutual funds. We talked about, going in and, investing in companies like Zoom, Beyond Meat. How does risk come into play? Is there any way to measure my risk tolerance? I know in theory what my risk tolerance, but is there any way to measure that? What about, age? Should I be doing certain things at certain ages? Or is there any wisdom you can share on that?
Yeah, I think so. I'm not the expert. Sometimes get billed that way, but I don't claim to be. But what I would say is that most people think of, it's probably a general rule, that the younger you are, the more risky you can be. The older you are, the more risk adverse. What I would say, that's a general good thought process. But I think a better thought process is to think about not how old you are, but when you'll need the money. We have clients that are, in their 70s, and I have invested very aggressively. And sometimes I have to have a conversation with our compliance team about, why is this person, 100% equities? And it's simple. This money is not money that this client will ever spend. It's money that their grandkids, who some are born or not born, or great grandkids. And so why not have it aggressive for them? So you need to think about the end goal. What are these dollars trying to accomplish? When will they be spent? That really determines the time frame. Any investment or stock that you purchase, in my opinion, for the most part, it needs to be at a minimum 3 to 5 year hold, unless you have some very specific thing that you're working on.
So you mentioned something there that I really latched onto, which is, you said you have some clients that are investing in the stock market, not necessarily for themselves, but for their grandkids.
Yes.
As we talk about building generational wealth in the Black community, we all may or may not know that, it takes 3 generations to build it, but just 1 generation to lose it.
Unfortunately.
And so is that something that you would, maybe wisdom that you might, encourage someone, maybe think about, investing on behalf of your child or your grandchild, or keeping that concept in mind?
Yes, that is so important. I sat on the board for Junior Achievement for a couple years and have done various things with our clients and their children and their grandchildren, even to bringing them in the office before COVID, right? And teaching them workshops and these types of things. They need to understand that the money that they're receiving for everything, for electricity, for housing, that it doesn't grow on trees. But until you put them in a situation, almost a simulation, where they have to come up with some answers, they just don't get it. That's one of the reasons I credit Junior Achievement. That's a local organization here. Well, it's actually national, but we have a local organization here with the work that they do in, from elementary school, middle school, and high school, with teaching. Even some of JCPS now is starting the process of really starting to implement financial literacy in their programs. But if that's not there, I know that's there as a parent, as a grandparent, as an uncle, an aunt, a guardian. You need to talk to your kids about financial literacy.
Wow. So our next segment is actually going to be on investing in youth. Mm-hmm. And there's some wonderful organizations that are doing investment, clubs and strategies around that. Mm-hmm. What are some ways that, even a child could learn how to invest? Is that possible for a child to learn either in a gaming system or in the real world?
Yes.
Just like you set up a bank account for a child?
Yes. One of the things I would hope you were going to ask me is about the importance of having mentors. Mm. I have so many mentors, some of them don't even know that I'm their mentee. There are people that are on TV or they have books and I just study all their stuff. One that I'm sure a lot of people are familiar with is Robert T. Kiyosaki. Yeah. He has this game that's called Cash Flow, similar to Monopoly, but this particular game basically teaches you the course of life. So Monopoly, playing that game, we played that just last week before my oldest son head off for college. It's something that we do as a family. And you should see the negotiation that happens over Boardwalk and over Park Place. But that engagement of understanding purchasing equity and then people landing on your property and having to pay rent, those are lessons that can easily be transferred to a 3-year-old, 4-year-old. And then there's games on their phones and iPads that have simulations that they can use.
Wow, that's amazing. So I think we have time for one last question. Yep. And I wanted that to be, I know we talked about the importance of diversifying your stock market investments. Yep. But you also have a diversified investment pool in the broader context.
Correct.
You're into real estate investing as well as stock markets, and you're an entrepreneur. Mm-hmm. Can you talk a little bit about how do you balance those things, as you're thinking about being in all three areas where some people, might be like, I just want to be in one and put all my stuff in one. What's your advice on, doubling down on one or versus spreading out?
I like the idea of specification. I think it's a great concept. When you can drill down on one particular item and be the best in world class for that thing, I think that's a great thing. But whoever said you couldn't do that in 3 different areas? If you can build a good staff, a team, or systems, you can do that. And one of the things that I think is most important, I want to make sure that I share this, that I am troubled by when I see entrepreneurs and even business leaders today, is I feel like people are not offering value. And in whatever you do, don't just give people their money's worth. You need to give them more than their money's worth. And even if you're not an employer, if you're an employee, don't try to do the least. You don't have to always do the most, but don't always try to wiggle your way out of doing something. And as a business owner, try not to give your clients or customers the least. We have grown immensely over the last 22 years. We don't do any marketing. Everything is word of mouth. And when people really understand that you actually care about them and not just the dollars in their pocket, it makes a difference. So I can share tons of superficial ideas, but that's one I want to make sure that I convey is give value and care about people, and everything else will come into play.
Wow. Thank you so much, Orlando, for being here with us. We have learned some really great nuggets. We learned about the stock market. We learned about, adding value as an entrepreneur. We learned about investing in youth, which is another segment we'll have, but we kind of got a teaser in this segment of ways that you can educate your youth, even investing on behalf of your youth, maybe take those investments and can pay for college if you start young enough. Yep. So I hope to have you on again. And again, thank you so much. And for you all, please stay tuned. We'll be coming back with our next segment talking about how we can further invest in youth.
are proud to bring together university resources, Tier 1 level research, and residents as expert collaborators from West Louisville neighborhoods. Why West Louisville? The greatest of all time comes from West Louisville.
Cassius Clay from Louisville, Kentucky. I am the greatest.
Knowledge, resources, and love abound. It's access that we all need. Louisville Change Lab is your connector.
Hello, my name is Ivory Rollins Cross, and it is my pleasure to serve as the director of the Louisville Change Lab.
Welcome back to the Wealth Builder Movement. Well, we're about to get into investing in our youth. So how do we make next gen wealth? By actually investing in our youth. And in the previous segment, you heard us talk a little bit about how you can get kids involved in investment strategies, even investing on behalf of kids in the stock market. And you're going to hear a whole lot more about this now, including community-based investment strategies for investing in our youth, as well as investing in our youth through building them up as entrepreneurs. So I'm going to kick right into it. We are here with our panelists, Malcolm Muhammad, soon to be Dr. Malcolm Muhammad, getting his PhD in entrepreneurship. I hope that I said that right, from University of Louisville. And then Stacy Bailey, and I hope I don't butcher the hyphenation, Najai. I mean, she says it's so much beautiful, more pretty than I do. That's a gorgeous last name. Thank you so much for being here. Stacy is coming and joining us from Bridge Kids International, which is a phenomenal program. We're going to hear a little bit about that general program, but then launch right into the Kazazi Fund, which is this unique thing that they are doing to help families collectively invest. So let's kick right into it with our first question to Malcolm. Malcolm, you're getting a PhD in entrepreneurship. Of course, you're very passionate about it. Where did your own entrepreneurial journey start? And did somebody invest in you as a youth?
Thank you, Angelique. My journey in entrepreneurship has a very, very strong foundation in my family. So some of my earliest memories, I give a lot of credit to my dad for really instilling that, entrepreneurial kind of hustler mentality into me. So he's a baker. He's been doing it for like 20 years now. And I remember at a very, very young age, just riding around with him, delivering cakes and pies and cookies to stores all over Detroit. And so him just instilling in me getting that inside view of not working for anybody, having to hold yourself accountable, that always kind of stuck with me. And even my mom, she was an event planner, kind of got thrown off, of course, by the pandemic. Not that many events going on, but she pivoted, which, you have to do as an entrepreneur. So now she does more of screen printing, merchandising, branding type stuff. And even my sister, it seems to have rubbed off on her a little bit too, because she's now developing her own line of skincare and cosmetic products. So that type of stuff, I think it was really just that family structure of thinking differently and thinking about how to create value for yourself that kind of stuck with me and kind of shaped my journey as an entrepreneur. So it's kind of a unique journey to end up, where I am today, pursuing a PhD in entrepreneurship. It wasn't something that I always wanted to do. It just kind of, at one point, in my professional journey, I was like, I want to do something different. And then somehow I landed on PhD. So that's where I am today, working on that and a few other ventures that I'm sure we'll talk about. But yeah, I'm excited to be here.
Awesome, Malcolm. So I'm going to stick with Malcolm for a moment, and I want to just jump right into it. Can you talk to us about Project Gel? So you went from having somebody invest in you as a youth in entrepreneurship, and now you are actually have co-founded an organization with other individuals to invest in youth through entrepreneurial programming. Can you talk about Project Gel, how it came to be, and what you all are doing?
Right, absolutely. So Project Gel, GEL, stands for Growing Entrepreneurial Leaders. And so I started that probably about a year ago with my partners, Quanisha Shawanabin, who's a third grade teacher in Ann Arbor, Michigan, and also Jerron Jones, who's also a PhD student at Bellarmine University in higher education. And we kind of came together over some shared values that there was a real sense of urgency around youth and their educational system, and how nobody was going to save them from kind of what we saw as dire straits in education that were only intensified by the pandemic and remote learning and that digital divide that existed. So we spent a lot of time researching, conducting interviews, focus groups, surveys to understand and talk to teachers and students and parents and really see what are the gaps in the educational system, why are these gaps persisting for so long? So fast forward a year, over this past summer, we started to implement our programming, and really what we look to do is just develop these community learning spaces where we can teach entrepreneurship to the youth, teach them to engage their creativity, teach them to be creative problem solvers, and teach them to recognize and develop their own opportunities for value creation. So we concluded our social entrepreneurship project over the summer, where we took them through social advocacy and community justice issues, taught them how to recognize problems in that realm, and really after that started to teach them, the tenets of entrepreneurship and show them how to be entrepreneurial and come up with solutions to some of these community problems. And Angelique was a wonderful speaker during that camp, and we concluded with a pitch event where they came up with some brilliant ideas about how they can be entrepreneurs and come up with solutions to some community problems. So. We're really excited about continuing to work with these students and helping them develop those ideas.
Wow, and I can remember one thing from the program that just stood out to me was that whenever I asked the youth about, hey, if the world was your oyster, what business would you do? And then what would be your intent? Like, why would you want to go into entrepreneurship? And I think almost all of them tied it back to wanting to help their families and their community. And that brings me to the Kazazi Fund that's happening through the Bridge Kids International and Stacy's work. And so Stacy, could you talk to us a little bit about Bridge Kids International and then how the Kazazi Fund is actually helping communities and families collectively invest? And also, I'm gonna throw this little one in there too. So I'm gonna give you a trifold question here. Okay. Where does the Kazazi Fund come from? What was the onus behind it?
Sure. Okay. So Bridge Kids International, we're actually a global nonprofit organization, but based right here in Louisville, Kentucky. And we focus on using the power of African heritage culture really as a tool to develop young people. And then, actually very close to what Malcolm is talking about, really helping them develop their social entrepreneurial spirits. And so our young folks around the world actually create community-based projects. And so the Kazazi Fund actually came about when there was a group, we pulled together a group of Africans and African Americans to put our heads together about how do we use our culture, to the wisdom of our culture, to develop our own solutions to challenges in our communities. And we were really inspired by a Congolese young man who told us that there's a group there called the Nande, and almost nobody is poor because when a child is born, they're herding people, and people from the community would come and bring like a cow or a goat. That herd would grow. As the child grew, it would be in someone's care who would also teach the child to take care of it. When they reach young adulthood, they start out with wealth. And it seemed like a very simple concept. So it's like, how do we take that, since we don't deal in like cows and sheep, and turn that into, something that we could assist them here. And so the Kazazi Fund is just that. It's child focused, it's community based, and it's culturally derived. And what happens is families become together. They put about $20 a month. That's about $250 a year. they put it into the pot and it's collectively invested. And so over the course of the child's life, they're learning about financial education and more, and they can also earn more money by doing certain things that are in their best interest. And our goal is to get to at least $10,000 per young person by the time they reach young adulthood. And then they can use that money, they can keep their account open till the age of 30, and they can use that money for education, for entrepreneurship, or for home ownership, or a combination of those.
Wow, that's amazing. It's, and it's more than just people investing on behalf of youth, because you said the youth actually learn, get educational training on what this means and how they themselves can become an investor. Is there opportunities for people to support families that, may or may not be able to, afford that amount, or maybe they want to boost it. Maybe they say, hey, I want to get, I want to do 100 a month. Is there opportunities for people to contribute into this?
Absolutely. I mean, that's part of the plan, because it's going to take more than just the individual families to grow. And the idea is to grow the fund, and so, we have legacy families who are families who can do that $20 or more. And then we have rising families who are working on it. So we are really looking for people to invest in the fund, whether it's for an individual family or for the fund in general.
Wow. So Malcolm, I'm going to go back to you. And I really want to ask this question around, you're doing educational training around entrepreneurship. Are you dumbing down the topics, or are you teaching these highly sophisticated topics to youth and they're grasping it just as it is?
That's a good question. I wouldn't say that I'm dumbing it down, but you hear that old adage, like if you don't understand something well enough to explain it to a fifth grader, then you don't understand it at all. So that's kind of the idea that I build off of, to say that I'm not necessarily dumbing it down, but I want to be as clear as possible, and to understand that when you're working with the youth, what I've learned is that they really are eager to learn, and they try their best to really understand the concepts that you put forth towards them. And so I haven't really had any issue getting them to understand the concepts of entrepreneurship. They're really engaged, and when you give them, a platform to be autonomous, to be creative, to explore their own ideas, then they are really, the sky's the limit for them. So I haven't had any issue with it, and I wouldn't say dumb it down at all. Like they teach me, if anything, how to make the curriculum better.
And I know when I attended that one session, what blew me away was, here's Malcolm teaching. I am not being, extra gracious, I think. This is quite serious. Teaching the same curriculum that I was teaching to master's students in the business school, using the same words, and the youth, I was, giving them a little, on the spot, not even pop quiz, but just, I was thinking like, oh, give me some soft. They were, just as you said, they knew it. They were correcting each other on it, and anybody else. And it wasn't about book knowledge. No. They grasped the concept of entrepreneurship, the concept of investigating and doing customer discovery beforehand. They grasped the concept of financing for your business. They grasped the concept of making a plan through business model canvas. So it wasn't about memorizing words or taking a test and can you get these keywords. Like you could see in their minds that, wow, okay, they were a room full of entrepreneurs. And of course, some of them already had to ask them, these were middle school students. So I asked them, raise your hand if you already have a business. I think we had like almost 50% of the room already had a business. So going back to Stacy, when we talk about that, 50% of the room, when I'm pulling these middle school students, they already had a business. I don't think that this generation of kids is going to wait as long as, even I'm part of the millennial generation. Millennials, they thought we took off quickly, in terms of grasping entrepreneurship and wanted to start young. This new generation, they're not going to start, they're not going to wait to the start. So what are you seeing with the kids that are going through the program that you're doing? How are they grasping the investment topics?
I mean, they are, and entrepreneurship is, part of what we're about too. So it's all very connected. We actually had our first session on investing. We handled the basics first, savings, understanding credit and basically, and then families wanted to get into something like more and deeper. So we're just at the end of this month, we're going to be sending out like $25 per child for those who want to participate, and they're going to invest that money in the stock market. We're going to follow things together. So, and I totally agree with you that they are ready to get on. And we have some entrepreneurs already in the group too. And I think so when we talk about waiting until they're, young adults, to invest in them, we want to, again, build the fund so that we have money to invest in them when they're ready.
Wow. And then continuing on with you, Stacey, as a follow-up question, you all are actually going to be putting together a tech-enabled platform so that this can be maybe an app, sort of say, our website for the fund. I know you're very early in that stage, but that was very intriguing to me because I could easily see this spreading nationally, even globally, where all around the world families are able to kind of use this Kazazi method.
That's what we're hoping. I mean, it's kind of a simple idea, but the back end of it, the technical part of it, isn't that simple, So we're really trying to figure it out. We're in our pilot year, and so we're working on that now.
Wow, that's amazing. We talked in one of our other segments about having an idea and not necessarily being a tech specialist, but still not being afraid to launch into building a tech-enabled or a tech platform, even though you have a PhD in electrical engineering like I have. You don't need that. You just need the idea, and you find the people that have it. And I'm so glad that you guys are on that trajectory. And shoot, it might even be the youth, because the youth, they could build some apps and technology too. They might be like, hey, let's just give us a shot. We'll build it. We'll have it done in a week.
I love it.
So I want to switch gears a little bit now and we talked about entrepreneurship, we talked about stock market investment. And I'm going to start with you, Malcolm, and really switch gears and talk about could this be extended, this kind of training to real estate? Could this, I'll get to you in a moment, Stacey, about, could there be other community investment things that could happen? So Malcolm, do you think that this educational curriculum that you're developing with Project GEL could be extended to areas beyond entrepreneurship in terms of wealth building?
Absolutely. I think the key for us is to understand that we really, in my opinion, have been underestimating the youth. And so one of the tenets of our program is to really challenge them and push them to stretch creatively, to stretch intellectually, and not go into anything assuming that this is too much for them, but expose them to it first and see where they stand on it, and then allow them to show you their boundaries and show you their constraints. And most of the time, it goes way beyond what you thought. And so we're always of the mind that let's empower them with all the resources they need to explore their ideas fully. Let's not limit them, but let's test them, right? And let's challenge them, and let's give them everything they need to be successful without putting any constraints on it.
Wow, that's amazing. And then I know you and I had a conversation, Stacey, and in that conversation, we had talked about, this concept. We were just kicking around, you were kicking around ideas and telling me, hey, we've already thought of some maybe next phases in the fund. And one of those ideas that I thought was really cool that you had kind of put out there was this concept of even home ownership or collective community real estate investment. So again, we had a segment talking about gentrification versus revitalization, and talk to us about how maybe in the future, maybe not now, maybe in the future, the Kazazi Fund could even extend to building up the infrastructure of a community through collective investment.
I mean, I think it's all about mindset, right? Mm-hmm. And that's really what we're trying to lay down now, long-term thinking, and that we can do things collectively. But from the very beginning, because we're about the family, right? I had families saying to me, we could collectively buy some land. What if we were to do our own, developing, putting our money together instead of just developing in the stock market, using real estate? I mean, when you and I were talking about, this notion that, okay, you have folks who are potentially maybe seniors who don't have anyone to pass their, home to. Could we get them connected up? You get young families ready who would really want that home. And so we're building up, and then there are lots of different creative ways. I think if we have a collective mindset and we can think outside of just these typical ways of building community.
So that's amazing to me. So it's just, I mean, the options are limitless. And I think the core concept with all of it is investing in youth while they're young, and then also not only literally investing, whether it's on their behalf or teaching them how to take their own funds and invest it in, but it's also educational investment into youth so that they can learn these wealth concepts quite early. So we are almost out of time, but I did want to leave with a couple of pieces of advice for our viewers. What is an actionable thing, Malcolm, that our viewers could do if they're saying, hey, I want to, get my child involved in entrepreneurship? Maybe as a parent, they may or may not already have businesses themselves, but are there any educational resources for youth on entrepreneurship? Does Project GEL in the future going to do some national resources?
Well, first, I'll say go to projectgel.org and see what type of programs we're doing, but because we would love to connect with as many youth as possible. And we're building our framework in a way that we can make it portable, make it something that can be implemented in a bunch of different communities. But in general, I would say just start, right? Because entrepreneurship is a learning journey. And you're not going to have all the answers up front. So if you have a child that is interested in entrepreneurship, go on that journey with them. Both of you take that step to make the sacrifice to get involved in something that you have no clue about, because that's what entrepreneurs do. So there's a lot of educational resources out there that are free. YouTube, there's a lot of books out there that you can do. So just start is the key. That's the main advice I would give to any entrepreneur. Just start. There's no recipe for success until you start.
Wow. And then, Stacey, for you, the last question I had is really around if somebody is saying, hey, I know some families in my community and, we'd like to get together and, do, some collective investing. What are some, I know probably there was, some challenges in getting everybody on the same page. What is one piece of advice you could give to our viewers in terms of how to bring everybody together, and then also how to get everybody on the same page in terms of what the strategy is going to be?
When you talk about money, trust is probably the main thing, right? And so I think it's helping, everyone. It's taking time. It took us about 18 months, to develop the concept before we felt we were ready, because we said the last thing you want to do is to somehow break trust. And so I think it's just those honest conversations and a lot of talking, that really is what it is. And it takes time, to do that so that people feel comfortable and confident. Okay, I'm willing to take this journey together with you or with some other folks, so and so we're working on that pilot so we can prove it. So more people will say, yeah, they're legit.
Wonderful. Well, thank you both for joining us. I know that our viewers are excited. Of course, we'll be dropping links in the chat for both of the websites for both of these programs so you guys can connect and hopefully get a Kazazi Fund in your neighborhood or a Project GEL curriculum going in your neighborhood or in your school, because I know you guys are on the school system as well, contracted out there. So stay tuned. We will be coming back, and please keep building wealth, and please share this broadcast with others.
Hello, I'm Timothy Findley Jr. The Louisville Change Lab has taken the incubation model and enhanced it through innovation and outreach to the West Louisville community. We at Life Development Corporation are thankful to be a part of this transcendent initiative with the University of Louisville Change Lab.
We are proud to bring together university resources, Tier 1 level research, and residents as expert collaborators from West Louisville neighborhoods. Why West Louisville? The greatest of all time comes from West Louisville.
Cassius Clay from Louisville, Kentucky. I am the greatest.
Knowledge, resources, and love abound. It's access that we all need. Louisville Change Lab is your connector.
Hello, my name is Ivory Rollins Cross, and it is my pleasure to serve as the director of the Louisville Change Lab.
The Wealth Builder movement isn't about money, it's about peace of mind, hope for the future, and fulfilling your God-given purpose. You are a wealth builder. You're looking to launch a new business, invest in your community, make systemic change, and actionable plans. You are a wealth builder, but you can't do it alone. Join Wealth Builder Movement, an online collective advancing Black and Brown wealth together. By joining our Facebook group and YouTube channel, you will learn from, invest with, and leverage others. Wealth is a group activity. Work, create, and build with others. Join the movement, the Wealth Builder Movement.
Welcome back to the Wealth Builder Movement. I am particularly excited for this particular panel. We have some phenomenal, not only entrepreneurs, but investors that are here with us that are going to explain to us, hey, what's a startup? What's equity investing? What's venture capital? What's an IPO mean? All these things that, are super critical. One of our sessions that we had on real estate, we heard that, if you want to become a millionaire, you might need to be invested in real estate. That's what the books were saying. Well, if you want to become a billionaire, then you might want to think about startups and equity investing. So I'm going to get started right away because I know our time is limited. And I'm going to start by introducing our panelists. Camille is coming into us virtually, so I'll mention her first, and then I'm going to move over to Chris. Camille's here with us virtually. Camille Ali Jackson. I cannot say enough phenomenal things about her. I'm actually going to let her share her own journey. But of note, of course, is that she's a co-founder of Aclaris Therapeutics, but also having founded several other companies, Princeton, Harvard grad. And so we are going to get into the depths of how she got to be at the top of the game, at the very tippity top. And then but before we get into that, I really want to get into introducing you to Chris Redd, who's here with us. And Chris is going to walk us through not only his amazing new fund that he started called the Bridge Fund, but he's going to walk us through what is equity investing and what is a startup. So Chris, thank you so much for being here with us. Camille, thank you for being here with us. Chris, kick us off. Can you tell us about, the Bridge Fund?
Thank you first for having me today. It's an honor to be here. The Bridge Fund is essentially a community-fueled venture capital fund, really filling the angel area of funding for startups, where we have a model where we're looking at our members who will be entrepreneurs and founders who already had some level of success as the first check writers into the fund, and being able to write checks into the new innovators in the community that are up and coming, and be able to give them time with their expertise to help guide them at an earlier stage, either through customer acquisition, product market fit, and really have those experience around at an early stage to really drive bigger outcomes, whether it's from profitability standpoint or getting to the next stage of funding.
Wow. So it's not just about the money with the Bridge Fund. It's about the mentorship, the access to resources, the connections that will come from those entrepreneurs that have been successful. In a sense, I would say reaching back, but it's more than reaching back. It's really reaching out for them because they're now investing through an equity investment into these startups. So you talk about what that means to do an equity investment in a startup, and what is a startup?
Yeah, a couple of things. We look at really creating a new angel investor in the community, and we feel like founders who already are doing the work but don't have time to invest, this is a great mechanism where they can start investing to the new entrepreneur. And start becoming more experienced investors, which creates this flywheel effect in the ecosystem. You look at you said equity investing, and so essentially, as an early stage company that something is potentially scalable, equity investing is really selling a percentage of your company for some capital, and really finding the right partners to help take the ride with you to go to the next level.
Wow. And then you mentioned something called an angel investor.
Yeah.
And I know there's a technical term for that, technical definition that the government has nicely set up. And there's some looser rules, around other ways to do angel type investing.
Yes.
But, what is an angel investor?
A lot of times the angel term, it's really a lot of times you have this friends and family around, right? Those are really close to you, really are become essentially angels. And those who really want to do it more formally are typically what we call angel investors. And we were kicking around this idea around on Twitter recently that you're talking about the friends and family round, and so many people in our community, like, we don't have a network for that kind of friends and family round. So really looking, taking that term away and like making it the launch round. Like this, you're launching from the ground at an early stage. And a lot of times those investors that are taking that route with you at the very evolution of that are what we look at as angel investors.
Wow. And, it's a good point that you bring up about the friends and family round, for a lot of Black entrepreneurs, again, because we haven't had something called slavery. We haven't had generations of wealth. And so there are plenty of Black angel investors. Don't get me wrong. And of course,
Yes.
you point out some, here we are, some sitting right here with us today. But at the same time, although there are plenty of Black angel investors and plenty of angel investors that would invest in Black companies, we still know that less than 1% of us is getting that money. And before you even get to an angel investor or venture capital round, there's something called this seed round, or this pre-seed round called friends and family.
Absolutely.
And if your family doesn't have a lot of wealth to count, or your friend network isn't to strength, right? If you're just starting out in this journey, as you get further along, then you start amassing friends and stuff like that. But as you start out, not having that access to friends and family capital. And it sounds like you're saying the bridge fund is like your friends and your family kind of round.
First check into companies, right? And so especially if you look at our local ecosystem, we're focused on with the bridge fund, Kentucky, Indiana, Ohio, right? So making a stronger regional presence already to be a national force. But you look at a lot of capital that's flowing around the ecosystem, typically they're the last check into your round. So if you're raising $1 million, or if you're raising, a lot of times those funds are writing 250K checks, but you have to go find the first 750 before they actually give you that first check. And it doesn't really give you an opportunity to signal to other investors to get involved, because everyone is following. And we want to hopefully, maybe not to be the largest check-in, but we want to lead by being the first check-in and really signaling to other investors, this is a viable company and investment.
Wow. So basically you're de-risking, and unfortunately, as we know, it's just the data that's out there that when you have Black founded companies, the concept of risk, the threshold for risk seems to get further and further and further and further away. In other words, the companies are deemed more risky than they actually are.
Yeah.
So it's super critical to have early funding. Unfortunately, we have to live in the systemic, system that we live in, unfortunately. But to have funds like yourself that are saying, hey, we'll get you that first amount of money, get you a little bit further, because you might actually have to be a little bit further before you get that second round. Whether we have systemic injustice or not, in general, you'd want that. But certainly, I think that has a double impact, that it's kind of counterbalancing that. I'm going to move forward to Camille Ali Jackson, and I really wanted to connect with you on this panel and hear your journey and your story. I know you are invest as well, but I really wanted to start with hearing about your entrepreneurial journey. How did you get down the path, and where has it led you?
So, Angelique, thank you very much for inviting me here. I'm an accidental entrepreneur. I'm a first-generation college graduate. My parents did not go to college. In fact, my father didn't even graduate from high school. And so I didn't even know what a stock or a bond was. I had no idea. In fact, I remember the first time I applied for a job at the SEC, and the guy asked me, what's a stock and a bond? And I said, I don't know. And then at the end of the interview, he said, do you have any questions for me? And I said, what's the difference between a stock and a bond? And I got the job because I was going to walk out of that job, at least out of that interview, at least learning something, even if I didn't get the job. But I think he was so surprised that I had the nerve to ask the same question that he gave me the job. So the bottom line is I did not plan this. Life gets in the way while you're busy making other plans. I was a lawyer, and lawyers tend to be risk adverse. That's why you go into the law, you follow the rules, and you explain the rules to other people. And so what happened is I'm in a large corporation, Merck, and global pharmaceutical company. And basically I get into this argument with a Black female who's my supervisor, and we disagreed about something. And I felt she was, I was right and she was wrong. So I started looking for another job. No one left Merck because it was the mothership of pharmaceutical companies. Okay. You stayed there forever. The stock was so good that every single year you could put your children through school. You could buy your second home, your boat, because every single year, all the stock did was go up. And that's when I first learned about stock. and the fact that I was owned a piece of Merck. And so as a result of that, I had at that dispute with that supervisor, I made a jump that I would never have made into a small company that was being created. It was a spinoff from a DuPont Merck joint venture. And the person that was part of the team that was spinning it off was a Black man, Nigerian born, who wanted to be the general counsel as well as the head of business development. He wanted to fly all around the world. And so he needed somebody basically to manage the legal department and create the legal department. So I jumped ship because I'm angry at my boss. And I go to this small company called Indo, which ended up becoming a $1 billion pharmaceutical company. I was employee number 67. Okay. But as a result of leaving the safe place and doing and jumping into something that was unknown to me, okay, I end up getting to a space where I'm interacting with VCs who are funding the management buyout, okay? And of course, I'm the only Black in the room. If I'm not the only Black female, lots of times I was the only Black person in the room. And so that's how I learned about these VCs. You have an idea. You don't need any hard assets. You don't actually need a building. You don't need clothing. You don't need shoes. It's just intellectual property, which is an idea or concept, and they would give you multi-millions of dollars. At least white male management teams, they would give multi-millions of dollars. And so that's how I became a serial entrepreneur. We started creating, this is like my 9th company. We have a assets management company that we actually just dissolved last year, where we would take an asset from a large pharmaceutical company and wrap a management team around that asset and then go get private funding for that particular asset, take it from a certain stage of development, from phase 2 to phase 3, sell it back to the big pharmaceutical company. So I ended up selling my first company for $250 million up front, plus up to $1 billion in milestones and future royalty payments. My children still receive royalty checks from that first company that I sold in 2010. Second company, it just seems to be a number that follows me. $250 million up front, another up to potential $1 billion in milestones and royalties. My children receive royalty checks from that company. That was sold in 2013. And so I went on and on and on. That's how I ended up becoming an entrepreneur.
Wow. I mean, if you don't know, if you have been living somewhere under a rock and you did not know who Camille Ali Jackson was, I know you know now who she is. And, I love the fact that you kept reiterating, my children still get royalty checks off of that. And generational wealth is a big component of what we're doing here. So can you talk about, you have had several companies exit that you created, ones that have gone public. Are you yourself an investor now? Are you in the game on that side as well?
Yes, I am. So again, from my Merck days, having learned the value of stock and what it can do to your lifestyle, and then becoming part of this management team and the co-founding team of several small, specialty pharmaceutical and biopharmaceutical companies, I understood now friends and family rounds, get in early so that you make a lot of money, when it's sold. So I learned about different types of exits. Our modus operandi for all of my companies were take the asset that the big company does not want, wrap a team around it, get this private funding from VCs or private equity, and then sell it back to big pharma so that they can actually commercialize the asset. So I have learned through that process that there are several ways for you to be able to make money. It's not just going and doing the IPO route. People want to do the IPO route because they think, okay, I want to go from, I want to scale up from being a multi-million-dollar company to $1 billion company. But you've got to remember with an IPO that you're going to have a lot of new owners, people whose faces you're never going to see, and they're all going to have a say-so about what you do and what you don't do. There are other ways to successfully exit and make money, generational wealth, not only for yourself, but for others, and create jobs for other people, for our community, not just making money for yourself and your immediate family, but creating jobs and wealth for other people in our community. So you could exit and sell to another company and never go the IPO route. But yes, to answer your question directly, I do now invest in other companies. I've got a young man who used to be a friend of one of my daughters from high school, and he comes to me now with opportunities to invest in various companies, things like Impossible Burger, Lime Scooter. And the thing that's interesting about this is that he's with a fund that it's a syndicate. Basically, they're allowed to get a certain amount of money that they have to go out and try to reach or achieve. So, for example, they'll give them $1 million. Go get $1 million from your friends and family, and then your money is put together with a whole bunch of other people's money. It's bundled, and then you're able to invest in the Impossible Burger or the Lime Scooter or whatever the company might be. So I've been investing that way. There are also funds or venture clubs that are set up by people who are alumni from various colleges. So my college, Princeton, for example, and my law school, Harvard, they have set up these venture funds. Well, usually we don't know anything about this because, we're first generation. We're the first time in these places. And so that's another way you can get into these. It's like a book club. You can get into these funds. They're usually on an annual basis, and you can put in $50,000. If you want to put in less, the friends and family rounds, we've done friends and family rounds with our private companies where we allow people to put in as little as $5,000. But again, if you're not in the circle, if you're not in the room, you don't know anything about it.
Wow. I have one last question for you, Camille, in terms of this kind of track, and then I'm going to kick back to Chris, and then we're going to close out with one last word of advice from you, Camille. We're actually almost out of time, but I really want to get these last little bits of questions in. Along that track of, you can invest as little a bit as $5,000 in, but it sounds to me like a big part of this is having the social capital so that when the deals are, you're in the room, the room where it happens. So, any advice on how people can build the social capital or leverage maybe even social capital and not aware of that they already have to be able to be in the room where it happens, to have access to deal flow?
Okay. I think Obama showed all of us this. You can raise $1 from 1,000 people, okay? Or you can try to raise $1,000 from one person. So we have to remember that even if we're not in the room where the white male is controlling access to the capital, we have our own wealth within our own communities if we just go around and collect that money. So we need to stop looking at, I want to be Mark Zuckerberg, or I want to be able to invest in Facebook. Let's look at investing in our own communities, in things that we know, hair care, beauty, health care, things that matter and that will impact our communities for the better. And so there are a lot of ways, if you're not in the door because you don't know the Rockefellers or the Oppenheimer or the people that are in the VC fund, there are ways to raise money through crowdfunding, through the people, through your sororities, through your fraternities, if you went to college, through your churches, okay? Those are what it means to raise money. And so that's why I tell people, sometimes don't always be looking over there at the largest group. Sometimes we just need to look around, to our friends and family, mama, papa, sister, brother, cousin. Sometimes they've got money that you're not even thinking about. And let's not always spend it on things, but invest on companies that ultimately create jobs for our community and long-term wealth, not just short-term benefit.
Wow. So one last question for you, Chris, along that same vein. You are now created the Bridge Fund, and I'm sure you're looking for other investors, just as Camille has said, to come into it. So really briefly, how was that process? Finding other friends and family, sort of say, to come into a fund with you? Because I know a lot of people nowadays are trying to do, just as Camille said, collectively put together resources.
Yeah, it's like raising as a founder, right? It's challenging at times, right? You're looking for the right people to go on this journey with you. And so right now, I really, just at the evolution of the Bridge Fund, I am really contacting founders that I know in their local community that I know are now looking to get into investing and starting the process of just having these conversations with them already. And I already gained 15 entrepreneurs with interest to invest, and from checks from 15K up to 100K already. So I'm just doing that process. And then now really, I've been leveraging my network over the last year, being able to create networks outside the area and talk to other fund managers and saying, how do I identify other LPs for larger checks, that $500,000 check to $1 million check. And so now I'm identifying those either foundations or larger entities that were willing to write those checks, and now starting to have those conversations.
Wow, amazing. So last question for you, Camille. We're actually out of time, but again, you two, I'm just gonna have to extend the time. We need to have a whole nother segment on this. So last question for you, Camille. Any last words of advice for an entrepreneur who may have been only shown the way of loans, bootstrapping? Any advice for somebody that says, I got an idea, and I think it might be a good idea, but I want to reach out to some investors and I want to learn how to position myself to be an attractive offer in terms of how to ideas. What I'm basically saying is any advice on how to pitch yourself to an investor?
Well, one thing you have to remember when you walk into the room that there is nobody in that room that's more important than you. And so you just have to keep that in your head. Okay. You don't have to be overconfident, but if that person dies, their mom's going to cry. If you die, your mom's going to cry. So you're just as important as they are. So you got to remember that you're all on the same playing field, no matter what people tell you. Okay. So if it's your idea, you need the money. You just need to remember you're bringing something to the table because you're bringing the idea. You need the money. If somebody says to you, the money's more important than the idea, sorry, I'm the talent. Okay. And so we need both. It's the chicken or the egg. Which comes first? We both need each other. Just keep that in mind. And I think people too also have to focus on ideas that don't only just enrich themselves, that also look for ideas that enrich other people. Because I think when you keep your hand extended like this is one piece of advice I give. Keep your hand outreach. That means money will flow out, but it also means things will flow back in. If you keep it like this, nothing flows out, but nothing flows back in.
Wow. Thank you so much, Camille, for being with us. Thank you both for being us. Thanks, Chris, for being with us. It's just been a wonderful conversation. I have learned a lot. I know the viewers have learned a lot, and we have to do this again. Thank you all. And please join us again for our next segment. Keep building wealth and stay tuned.
We are proud to bring together university resources, Tier 1 level research, and residents as expert collaborators from West Louisville neighborhoods. Why West Louisville? The greatest of all time comes from West Louisville.
Cassius Clay from Louisville, Kentucky. I am the greatest.
Knowledge, resources, and love abound. It's access that we all need. Louisville Change Lab is your connector.
Hello, my name is Ivory Rollins Cross, and it is my pleasure to serve as the director of the Louisville Change Lab.
The Wealth Builder movement isn't about money, it's about peace of mind, hope for the future, and fulfilling your God-given purpose. You are a wealth builder. You're looking to launch a new business, invest in your community, make systemic change, and actionable plans. You are a wealth builder, but you can't do it alone. Join Wealth Builder Movement, an online collective advancing Black and brown wealth together. By joining our Facebook group and YouTube channel, you will learn from invest with, and leverage others. Wealth is a group activity. Work, create, and build with others. Join the movement, the Wealth Builder Movement.